So I'm back with a brand new video on perquisites. Perquisites is a complex concept if you don't understand it properly. So this video will help you understand each of those important perquisites which mostly come in exam questions. The first perquisite we'll be covering is rent-free or concessional rent accommodation. So if you see, there are three cases. If the house is owned by the employer, it is rented or leased by the employer, or if it is given in a hotel. Let's look at the first case. If it is owned by the employer, then you have to see the population of the place in which the house is located. Depending on the population, the perquisite value ranges from 7.5% to 10% to 15%. If the accommodation is leased or rented by the employer and then given to the employee, then the perquisite value will be the rent or 15% of salary, whichever is lower. Note the words lower. This is one of the very few sections where for an income the amount to be considered is lower. If it is given in a hotel, then the perquisite value will be the room charges or 24% of salary, whichever is lower. The definition of salary for the purpose of rent-free accommodation is slightly different. Consider basic salary, DA which is included in the retirement benefits, commission, bonus, and all taxable allowances. But do not add any perquisites even if they are taxable. If a furnished accommodation is provided, in addition to the valuation of the house, add the cost of the furnishing. It depends on whether the furniture is owned or hired by the employer. If it is owned by the employer, the perquisite value is 10% of the original cost. And if it is hired by the employer, the actual hire charges will be the value of the perquisite. In a nutshell, first calculate the value of the unfurnished rent-free accommodation. We saw three cases above. Add to that the cost of the furniture, if furniture is provided, depending on whether it's owned or hired. You will get the value of the rent-free furnished accommodation, and reduce any amount recovered from the employee. You will get the value of the concessional furnished accommodation. The next perquisite we're going to be looking at is the motor car perquisite. I've given you three cases which are most likely to come in the exams. In the first case, the motor car is owned by the employer and paid also by the employer. The perquisite ranges from 1800 if the cubic capacity is up to 1.6 liters, and if it is more than 1.6 liters, the perquisite value is 2400 per month. If a driver or a chauffeur is provided, add another 900 per month to each of the above valuations. Remember that the calculations are to be done for the actual number of months. So if a car is provided for 5 months, you will calculate 1800 into 5 or 2400 into 5. In the second case, the car is owned by the employer and the expenses, however, are paid by the employee. The perquisite value in this case is 600, 900 and 900. In the third scenario, it is owned by the employee but paid for by the employer. The perquisite value is the actual expenditure incurred by the employer less the rates in case 1. So if you notice, the rates used are the same, so you don't have to learn it again. The next perquisite is in the case of specified employees. So who's a specified employee? A specified employee is a director of the company, an employee who has a voting power of at least 20%, and an employee whose income from salaries is greater than 50,000. The definition of salary for this purpose is very similar to the perquisite valuation when we were looking at rent-free accommodation, the only extra deduction that you'll have to consider is Section 16 deductions, which are given for entertainment allowance and professional tax. Under this perquisite, three things are taxable. The first one is people around the house. The employer provides you a gardener, sweeper, or a maid, or pays for these people. The actual amount paid is the value of the perquisite. The second case is facilities given to you: gas, electricity, and water. If it is given from the employer's own source, then the manufacturing cost to the employer will be considered. If it is not from his own source, then the amount paid by the employer will be the taxable perquisite. The third case is education facility given. If it is given in a school or institution owned by the employer, then you will have to consider the fee of a similar school in a nearby locality. And if the fees of the similar school is less than equal to 1,000 per month per child, then there will be no taxable perquisite. If the school is not owned by the employer, then the amount paid shall be considered as the taxable perquisite. The next perquisite is usage of assets. There are two categories in this. The first category is computer and laptops. There is no taxable perquisite even if used for personal purposes. Second category is any other asset. The valuation rules are similar to the rent-free accommodation cost of furniture. If it is owned by the employer, it is 10% of the original cost. If it is hired by the employer, then the actual hire charges will be the value of the perquisite. If a motor car is provided to be used by the employee, it will not be valued as per this clause. It will be valued under a separate clause which is available for motor cars. The next case is transfer of asset. This includes transfer of all kinds of assets, including laptops and motor cars. If you remember, laptops were excluded from the perquisite valuation in case of use of the asset. And for motor car, the perquisite valuation has a separate clause. But for transfer of asset, all assets will fall under this category. The first category is computer and electronic gadgets. The perquisite value is actual cost less 50% depreciation under WDV method for each completed year. The second category is a motor car. The valuation of the perquisite is actual cost less 20% depreciation using WDV for each completed year. The third case is any other asset apart from case 1 and case 2. The valuation will be actual cost less 10% depreciation using straight line method for each completed year. If the assets are more than 10 years old, even if you derive a value, that you will not have any taxable perquisite. The next perquisite is medical treatment in India. The perquisite is the actual amount paid, but there will be no perquisite in the following three cases. The first case, the hospital is owned by the employer, approved by the Chief Commissioner of Income Tax, is a government hospital, is a hospital maintained by a local authority, or is a hospital which is approved under the central government health scheme. The second case is if a group insurance policy is taken on the health of the employees. There will be no taxable perquisite. The third case is if medical expenses incurred by the employee are reimbursed, but there is an upper limit of 15,000 rupees for this. Remember that this is based on the actual bills. This is not a flat deduction. So if the reimbursement is given without submission of bills, then it would ideally be taxable in the hands of the employee. These are the list of other perquisites which may also appear in problems. The first one is employee's obligation paid by employer. The actual amount paid is the perquisite. The second case is interest-free or concessional interest loan. The notional interest, which is the SBI rate of interest on the first day of April of the previous year, is the perquisite. The third case is credit card, the actual amount paid, including the annual fees. The fourth case is meals provided. The perquisite is the actual amount paid. However, there is an exemption for meals up to ₹50 and beverages during office hours. So in these two cases, there is no taxable perquisite. The last case is in the case of a gift given by the employer to the employee. The threshold limit is 5,000. If the gift is within 5,000, then there is no perquisite. If it exceeds 5,000, then it will be fully taxable. I've enabled the download of these charts that I've used. Feel free to download them. The link is given in the description of the video. Thanks a lot for watching.